What's happening, investors? It's December 14th, 2022. The end of the year is approaching, and I'm not looking forward to doing the year-end review because I'm down substantially this year, and it's going to be the first losing year in quite a few years now. So that's not fun. But nevertheless, I have an important topic that I want to talk about, briefly mention at the very least, maybe spend a minute on it. That's going to happen after the usual account review. So first, I'm going to jump into the account right away here. Oh, what? Why is this like this? It's okay. Quick fix. I'm gonna do it on the fly. There's no edits, so we'll have to do it as fast as I can here. Does this work? All right, it should work. Okay. I'm sitting at all right, maybe I'll do this. Okay, I'm sitting at $196, and I'm down 1.69% today, which is worse than the markets. And I'm going to show the relative performance of everything. Sorry, I'm trying to maneuver my windows here. Completely unprepared for this. But first, I'm going to run through all the positions so you can see them. And then I also want to talk about this retirement tab right here. But maybe in another video. I'll probably make another video. So these are the options positions first on the right. I'm going to scroll through them really quickly. You can pause the video player at any moment to try to figure out the exact positions. All the information contained is in this little box right here, including the ticker symbol, the strike price, the expiration date, and the number of contracts, and whether they're a buy or a sell. Maybe I need to do this because, yeah, this is what happened, guys. So I was trying to experiment with this fancy, like, Windows click stuff where you just snap things into place, but then it turns out that it's working against me. It doesn't, it screws up OBS. I use OBS for recording, in case you didn't know. It's pretty cool software. I think it's open source. I'm not sure, but I like it the most out of all the other ones. If you have a recommendation on recording software, you can just let me know. Okay, I'm just going to stick to the old way of doing things because this is totally messing me up. So, back on topic. I'm going to scroll through these positions. Feel free to pause the video player at any moment. Now you can see the expiration date, and you can see whether it's a sell or a buy and how many contracts are on there. The numbers on the right are just a change in value in percentage terms and in dollar terms for today. That's how I've set it up. I want to see the percentage. Actually, I want to see the equity value, not today's return, rather. There you go. Now it shows in dollar amounts and in percentage terms. Apple was down a little bit today. You can see the entire market dropped today, and it's because of the FOMC meeting, or I should say Fed speak, like Jerome Powell's comments on interest rates and in the economy as a whole. It didn't drop as much as it could have. The markets, just like Apple, dropped very sharply in the beginning when it was announced that it's going to be a 50 basis point or 0.5% rate hike on rates. And so, of course, the market reacted negatively. There was also some strong talk by Powell, like how he's going to be increasing the rates even higher until inflation shows substantial continuous sign of decreasing back to their target, which is 2%. Now, I'm not a big macro guy. I mean, I did a lot of macro reading, just like anybody else. I'm a macro tourist, as they say in the macro circles. And there is a whole entire very long story about like how the number 2 inflationary percentage is very arbitrary, and it just kind of randomly came up by one of the central banks, maybe like New Zealand or something, and then the entire world adopted it because they're struggling for a benchmark. But it's very arbitrary. I think the real goal of the central banks is actually just same as any people in power, which is stability. Like they like the status quo. They don't want the boat to be rocked, and so they're aiming for stability. Now, there's all kinds of academic reasons why mild deflation might be good for the economy overall, and how the fiat system is superior to commodity currency and all that, but I don't really want to get into this debate. So it's a very high level, very explored, and very nuanced topic that needs experts on both sides in order to arrive to a greater understanding of what's actually required in the economy. So I'm just going to move on. I have a better topic to discuss today, from a personal standpoint. Okay, so this is Apple. Let's do a little relative comparison. Okay, so my day, just to see how crappy I've been doing compared to the S&P 500 over the last week or 2 or 3 months or 4 months or so. So the 1 week is I'm down 1.43%. 1 month is huge, down 17%. 3 months is down 17% as well. Year to date, I think it's about probably 16 or 17. Okay, so the 1 year, year to date, 3 months, and 1 month are basically the same. They're all down 17%, and I'm mildly down on the week. So let's see how the S&P 500 did, measured by the SPY exchange traded fund, which is basically the S&P 500 index, which is an index comprised of the 500 largest, most profitable American-based companies in the world. So today it was down 0.64. On the week it's up, whereas I'm down, so that's 3% for the market over me. The 1 month is relatively flat, and I'm down 17%. Really big loss relative to the market. On the 3 month, the market's up, whereas I'm down 17%. On the 1 year, the returns are a little closer, 13.5% down on the market versus me at 17. So bad. And on the 5 year, the market is up 50 point something percent. I'm definitely winning on the 5 year, but this long bout of overperformance is overshadowed by recent performance quite a bit. So even though I'm up 113, actually more like 110%, because I started investing somewhere here in August 28, 2018, and my account was already up 3% by then. The reason why it seems so flat is because there wasn't any money in there. So also when you add money, it kind of decreases the percentage gain. So it's not exactly the whole picture. It's not an entire accurate picture of what the account looks like. So it's hard to derive actually, the time weighted gains and all that stuff. So just take it for what it's worth. There was 73,000. Okay, there is $72,000 invested total in the account, and now I have 154. So I've invested that money over the time. I obviously started with $30,000 invested when I started making the videos, and I have not added any money in over a year. So if you want to take that into consideration, definitely had other things to do with the money, and however, I'm continuing to do this project here and making this account public and transparent fully, by the way. So if you want to know anything, let me go into the investing tab so you can get a better idea of the standing of the account. I have $113,000 in debt margin to Robinhood that I owe, which is 42.41% of the total market value of the account. So the way you get the total market value of the account is how much equity I have and how much margin I've used. And you combine those two together, and that's how much stocks or that's how much stuff worth in dollars that I'm operating under. Okay, so options, ETFs, etc., stocks. I don't have any bonds at the moment, but if I had bonds, that would fall under there too. Just everything, right? Combined, that's how much it's worth. However, half of that is borrowed, almost 42% of it. So in other words, one could say that I'm 84%, 85% leveraged. These are all the positions by equity. So Apple and Smith & Wesson used to be basically tied. Now Apple is $100,000 representing in my account, and then Smith & Wesson is only $77,000. So I've suffered huge losses in Smith & Wesson, as you can see, $33,000 negative. I would have been completely busting through the seams when it comes to all the benchmarks that I'm trying to compete with if it wasn't for this company's downfall. Now, I've also lost some money on Paramount as well, so negative $11,000 here. if I were to only stick to high quality stocks, I'd still be doing well. But my inner value and analysis led me to these two undervalued stocks, so I've been buying them, and it's to my detriment so far. Now, is that going to continue? I don't know. I made a really depressing video last time about, how I was getting a little apathetic, which leads me to my next topic that I want to discuss, okay? Which is a topic that's near and dear to my heart. Like, I've worked a lot on mental strength, which is, something that was very useful to me, or it was going to be very useful to me in competitive tennis play. So some of you don't know, I used to play competitive tennis. I used to play in the pro circuit a little bit. I did not make it very far. I wasn't on TV or anything like that. It's just like the lowest rung of professional tennis. Maybe you can call it like the equivalent, if you're an American, like the lowest tier of professional baseball or something like that, where you barely get any money, if not zero, and you have to pay for your own expenses and stuff like that. I wasn't even part of a team. It was just sponsored by a company. Just got some free equipment, and that's about it. I had to pay for everything else. Just wasn't good enough or whatever. But anyway, I was trying to make it, and I realized that mental strength was an area that was really lacking, and so I devoted like years into trying to improve my mental strength. And so those lessons I'm trying to apply to investing. And so one of them is very applicable right now, which is not necessarily hitting rock bottom, but the mental attitude that I need to have in order to make progress and to start succeeding. Okay. Now, the book that has had the most influence on my mental game has been the Book of Five Rings by Miyamoto Musashi. Some of you may know it. I found a free copy of it online, so if you're interested in reading it, I suggest it with a caveat. So here's the free copy. It is. I might leave a link behind on the bottom, but you can find it on holybooks.com. I don't know why Holy Books, not very holy, but it's a very practical journal basically. But the Book Five Rings, Miyamoto Musashi, and you can just read through it right here. It's completely free. The entire book's on there. So my favorite chapter is basically at the very bottom, and it's the shortest chapter. And it's called The Book of the Void. These are some quotes by some philosophers. I don't know why they put them in there. Try to find it. There you go. The Book of the Void. So there's some really, you can probably even fit it here in this video, and you can read through it by pausing the video. But my point here, the quote that I want to talk about is not in this chapter, but it's a quote that Miyamoto said. Musashi says that a way of the warrior is a resolute acceptance of death. So the way of the warrior can mean anything, right? I mean, he literally means the way of the warrior, but you can transfer those kinds of lessons. By the way, if you don't know who he is, he's a famous Japanese samurai that lived somewhere in the 15th or 16th century. And he's basically an undefeated warrior. He killed a lot of people, was in a lot of battles, defeated multiple men at one time. And that's, I don't think that's a myth. It's not a myth. It's kind of like more of a historical occurrence. And he's famous for many different strategies and being able to perform in the zone and all that. So there's quite a few lessons that one can learn from that book. I will warn you, though, that if you were about to read it, you have to, you might get sick of it in like the first couple chapters because it seems irrelevant. So all the stuff that he's talking about actual like physical techniques and movements in terms that are not very easy to understand. Like flowing water strike or the falling leaf strike or the monkey attitude, whatever stance. Or so you can read through all the stuff and you can try to draw and extrapolate, analogies, but it's very difficult. It took me, at first I was kind of intrigued, and then I put the book down. I didn't read it for a while, and it took me reading the book like over 10 times before I start getting into his mind and trying to figure out through the translations, because I'm sure this book's been translated a few times and probably worse and worse each time, through the translations what the author was actually trying to say. And obviously he speaks like the language of the body. He doesn't speak the language of the mouth, right? He's very physical in his descriptions, and so you kind of have to read a little bit between the lines and trying to translate what he means into modern meaning. So anyways, I really like that quote, and it's very applicable right now because the account is my decisions are struggling, and I found out that I'm having an emotional response. And so I've been thinking about that and thinking about what the right thing to do is, whether or not I should change methods and strategies. I've been thinking about that for over a week now, and I'll continue to think about it. But it occurred to me that I still got work to do. Like, I have not accepted death yet when it comes to investing, right? When it comes to the discipline of investing, I have not. And I thought I did. But if I'm having a response that is outside of just doing investing, that means that there's still work to be done. And so I don't want to make any decisions from this, state that I'm in. So I continue to think, and I'm sure that at one point, if I focus hard enough, like, the right move will be so obvious that I'll just do it one morning when I wake up. But as of right now, I think that I still have some mental growing to do. By the way, I encourage you all to read that book. I even got so inspired by this book that I wrote a book of my own about tennis. It's called Elite Tennis, and I sprinkled it with quotes from Miyamoto Musashi throughout, as kind of a way that summarizes and wraps each chapter in a nice little bow that you can just take away in one quote. So if you're interested, you can read that as well. But it's not an investment book, it has a couple chapters on mental strength and all that, but it's definitely, a lot about tennis. So anyway, I thought it was worth mentioning. I think I'm gonna this has been good. I'm gonna wrap it up here, and but if you have any questions or comments, please write them in the comments below. And I look forward to writing more of these video log journals and sharing my experiences with you guys. And I would appreciate if you share some experiences too. I really like that from my last video. I had a few responses sharing some of their stories when it comes to losing big amounts of money or large percentages of their portfolio, and how they dealt with it. So I like reading those comments. So please share some stories or what you think about the topic. So I like conversing. All right, I'm going to leave it right there. Talk to y'all later. Peace out.